Good day, fellow investors. I thought to start just a new series. Hope you will enjoy it. Espresso with Sven, or how my wife calls it, Svenspresso. And in this quick video, I want to discuss the market mentality and explain reflexivity, because it is a big topic on what's going on in the market. I found a research report, and I'll later discuss the impact that we as retail investors have on the market, which will be also something very interesting. But in this video, I really want an introduction to that, on how we impact the market. And we'll go through your comments, and some comments that really stood out for me in the comment section. I'll try to do a video every Monday on your comments, so please comment below, ask questions. What are you interested? This channel would be nothing without you. So thank you for that, thank you for subscribing, and thank you for your comments, and let's try to discuss them and increase the value here. So on your comments, PC said that one should not fall into the trap of this time things are differently, but with everybody investing in index funds, we might not see flat markets over the next 10, 15 years or ever. We might see just markets going up, 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 and up. And yes, when you look at the last 5, 10 years, markets just went up, 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 and up. And then you're thinking, okay, this will last forever. It won't, because investing is cycles. The problem is that you never know how long the cycle will last, and now with the stimulus it will last even longer. And it's important to look at those things, and one of the best people that did that is George Soros with reflexivity, that we'll introduce in a second. Then another comment is, if nobody likes value investing, and it seems like there are fewer value investors every day, who in the future will buy these value stocks for them to appreciate in value? And even fewer amount value investors. And this is something very interesting, and a lot of comments are about mentality and what are we? What are you? Are you an investor that buys businesses, looks at the earnings, the dividends, earnings growth, dividend growth, buybacks, and invests in that? Are you an investor, or you are someone who just wants to buy stocks that will go up? And I look at YouTube, and I thank you for subscribing, but big chunk of viewers just asks what to buy, what stocks will go up, and then God forbid if I do a video on a stock that went down, these comments haunt me for years on the stock that went down that I discussed. And this is something very important. Gives a great opportunity to us that invest in businesses. And as a value investor, I don't want my stocks to go up. I want them to go down, to get my dividends, reinvest in those, and be a bigger owner of the value on the globe. That's investing. That's what increases your wealth over your whole life cycles to eternity. It's sustainable, you don't lose money when things are bad, and you win the financial cycle game of life. And that's it. And we can all be winners if we switch from speculating stocks will go up to just pure investing. That's the core of this channel, and that's what I want to really discuss also here. Again, just another comment on Intel video. They just had earnings. Everybody's asking about update. I wrote a short update on my platform, as I do for all stocks that I cover, but it's just a quarter, and then you see park 7% of my portfolio here when there are other better companies and growth, and everybody's focused on growth. And the same commenter that did this then later on a different video said how he put a lot of money in Berkshire on March 23, should have invested in the S&P 500 like Buffett said, but Berkshire performed terribly over the last 8 months. So today, in the market, I see that the problem these days, 25% in 7 months is a tragedy. And people don't consider the risk and reward. Berkshire, financial fortress, not going bankrupt in March 2020 was a great risk-reward buy that led to 25% over the last 8 months. Yes, the S&P 500 exploded higher, but the S&P 500 is not a financial fortress with extremely strong earnings. That's the difference. That's the risk and reward. And looking in hindsight, everybody's seeing with the rear view mirror, everybody is seeing stocks going up, 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 and up. But that's not what investing is and what will happen in the future. Plus, there are extremely aggressive comments. Look at 2 videos spamming, buy Tesla, don't listen to this guy, he is stupid. That's me, I am stupid, buy Tesla calls now. So there is such a strong public there just buying Tesla. And Steve gives a great comment, who are these neighbors running around killing it in the stock market that bought Tesla? And that's a very pleasing comment for me. So Jimmy Chill is in the crowd. Thank you, Jimmy Chill. Thank you, Steve. So for us investors, I really wanted to explain the situation so that you don't fear missing out. Just keep investing over the long term, and that does well. And then we come to reflexivity. We have a lot of people, they have subjective realities, their thinking impacts the objective reality over time, and that improves the objective reality until it is not objective anymore. Their perspective changes and then impacts again the objective reality. For example, Tesla announces 5 billion capital buyback raise, taking advantage of the stock price. So people think Tesla is good, Tesla stock goes up, Tesla raises capital, has more money to develop meteoric rise. That meteoric rise improves earnings, growth, business, and that is what pushes Tesla higher and higher. On the reflexivity chart, if we look, okay, at some point this will be hit by reality and then we have a pickle. But at least I wanted to explain what is the situation with Tesla. And also with the rest of the market, the tech stocks, a lot of companies taking cheap debt to grow, make acquisitions, and that, yes, that can last. Tesla can last for another 10 years, depending on how good the cycle of reflexivity is. Tesla will go down when the sentiment and perception changes. For now, it's so strong, so probably it might go even more higher, but you never know. It's speculating, and that's something I don't do here. But it's very interesting to discuss, because it has huge repercussions on what's going on. 10x over what, a year and a half, 100x since the IPO, taking advantage of this, where the perception is positive, improves, the stock price improves earnings, improves the quality, improves the fundamentals, as they can issue shares at very good prices. But then the question is, are you investing in businesses or markets? Are you looking for stocks that will go up? Keep in mind, if you look for stocks that will go up, you will also find stocks that go down a lot. And then you will get disappointed when you hit a rut like we have seen 15 years, 22 years, and 30 years of markets going now nowhere, 12 years here. And when that happens, then you don't know why you're investing. So I'm telling you, always be an investor that invests in businesses, own businesses, and that's the message for this Espresso with Sven. Let me know if you like it in the comments. I hope you enjoyed it, and I'll see you in the next video where we'll likely analyze a stock.